specialise. Okay, so yeah, as I say, I'm Alex, and I specialise in bridging finance. Details at the top right, and these bullet points are where I specialise really. I'm going to be wanting to bring private equity options to the table for developers more and more as we get out and about more and more. Please, Boris, and yeah, looking forward to getting out and networking. Also, mezzanine options available, and all types of buy-to-let mortgages as well, and the refinance. Although currently, I'm using, I've got trusted colleagues that I use who aren't actually in EIP finance. We're specialising predominantly on the bridging and development finance. So that's me. We can go to the next slide. Okay, so what's bridging? It's very off the cuff, this, by the way. Myself and my PA have pulled it together in a very short amount of time. So very unrehearsed, but we'll see how we go. So it's short-term lending for a short-term lending requirement. So generally where a mortgage isn't suitable. So that's generally going to be where properties to run down, to rent out, and therefore mortgage. The important thing, to get a mortgage is that the property is bringing in rent to cover your monthly repayments, which I'll elaborate on shortly. So it's important to always use the correct form of lending for your requirement. Various reasons for that. Just if you're going to do things properly from the start. I'm an FCA, we're an FCA broker, and we shouldn't advise the wrong product for the wrong lending solution. Basically, we'll end up getting cast off panel, which is not the major issue. The major issue is that we're doing things properly. There's also something called the Hunter report. A lot of people aren't aware of, which is basically lenders, they share information about people that try and cut corners and perhaps get one over on them, and they'll just you'll end up getting blacklisted from valuable lenders. So please do use a broker that's going to advise you on the correct lending product. So yeah, if you've got a short-term lending solution, a lending requirement, you need to use bridging, which is a short-term lending option. Okay, next slide. Okay, so uses. So I'm sure a lot of you will have heard of buy, refurb, rent, refinance, or BRR or BRRR. So if you're looking at doing purchasing a property, doing it up, increasing the value of that property by doing a refurb, for example, then pulling out the majority of your cash on that. It's tricky to pull out all of your cash nowadays, but you can recycle that cash. Basically, it's a really good strategy for minimizing the amount of capital that you're actually flying through, and yeah, it's a really good strategy for making your capital go further. So that's a really good strategy. Flips, obviously. So a flip is if you're buying a property, doing it up, and then selling it on. So that is obviously going to be a short-term lending requirement. So again, that bridging is going to be suitable for that. Capital raising. So yeah, I mean, I had an example this week. I had a business that was desperate they had a lawsuit, and they desperately needed some cash to pay the legal fees, etc. So bridging is much quicker than a mortgage generally. So some lenders will work a lot faster than others. But if you're urgently in need of some cash, and it's for a business expense particularly, we can look at raising some capital there on a second charge, or even on a first charge. That particular case was on a residential mortgage. They had a residential mortgage, and they leveraged against the equity in the property using a second charge bridge, and we got them their funds within a week, which they were very happy about. They weren't too happy about the rate, but everything at speed comes with a premium, unfortunately. So below market value purchases. is another use of bridging. So if you've got a property which is below market value, so you're purchasing it at, say bridging lenders will generally work off the value of the property. Well, some will anyway, as opposed to working off the purchase price. So if you're lucky enough to off direct to vendor or by various other means, if you can find below market value properties, we can look at leveraging against the actual value of the property as opposed to the purchase price. So if the property is worth 200 grand and you get it for 150, some bridging lenders will leverage against the 200,000 as opposed to the 150, which means you don't have to put quite so much deposit down. Again, you can then refinance further down the line and pull that capital out. So it's very handy for below market value purchases. And lease option agreements. So quite a few of you will have heard of lease option agreements, no doubt. So when you're exiting a lease option, generally the property is going to be the purchase price is going to be lower than the value. So it works similar to an open the below market value purchase. You bridge against the value of the property and then refinance out onto a mortgage. Again, not eating up into too much of your capital. So as I say, generally the most common use would be the buy refurb, refinance and flips, but there are other options for bridging other uses. Okay. So the difference from a mortgage. So with bridging, it's based much more on the asset, so on the property and the margin in the deal, as opposed to the individual credit and rental income and these kinds of things. So the property isn't going to be pulling in generally a rental income when you're bridging, because it's not going to be tenantable. So yeah, a good way of So yeah, it's not crucial to have that rental income, because generally, onto the next point, the interest is retained. So I'll go into that in a little bit as well. So the interest is retained as the property isn't bringing in the income. So there's no rent to cover the interest. So what that means is that the interest is deducted from your loan amount, basically, day one. So if you're getting 75% loan to value, for example, you then have to deduct the interest for, say, if it's a flip, we look for 12 months. If it's a buy refurb refinance, we'll look at a slightly lower term, 9 months, something like that. So always factor in that the interest is generally retained. Now, we do have options of servicing the debt, but obviously that comes down to personal affordability and good credit and income and all this kind of thing, because obviously that property is not pulling in the rental income to cover the mortgage repayment. So they're going to look into in more detail if you want the serviced option to net you so that you get a higher amount day one, if that makes sense. If I'm going too fast and anyone's got any questions, by the way, do stop me. We're very interactive in this group, as everyone knows. So yeah, next slide, please, Claire. So rates and loan to values. So a lot of brokers will advertise, rates from 0.545%. These are monthly rates, by the way, but that's going to be a very low loan to value. You're looking at 40% loan to value, which most people don't use unless you're looking to leverage against your personal, your residential property or something like that. Generally, if we're looking at sort of 75% loan to value, we're going to be looking at 0.65 at the market leading rate. That's without any refurbishment funded. I'll go on to talk a little bit about refurbishment bridges. Obviously, with refurbishment bridging, the rates are slightly higher because, you know, the lenders are taking more risk and lending you more money. So loan to value. So AB Finance, just a shameless plug really here. So we do have an option up to 85% of open market value, which is exclusive to only sort of 7 brokers in the UK. So that's really good for below market value properties, obviously. So that lender, that particular lender, will lend up to 85% of the value of the property. So on below market value properties, that should in theory cover 100% of the purchase price. There is a slight caveat to that. You need to be doing a small amount of works to the product and increasing the value. They won't lend more than 75% of the end GDV of the done up value. So it's a really good product, especially for property traders, you know, who are buying and selling a lot of below market value properties, and it's just another offering we can offer. It's not cheap, but it's very useful if you're looking to grow your portfolio quickly and you've got access to below market value properties. That, however, is a bit of an anomaly. Generally, you're going to be looking at a maximum of 75% loan to purchase price. On the so generally maximum loan to of purchase price, or the 180-day value, whichever is the lower. So basically, a 180-day value, vacant possession, for those that don't know, this is what the majority of bridging lenders will work off. So it's basically, if that property is vacant and has to be sold within 180 days of it being put on the market, that is generally what bridging lenders will work off. There are other options, as I say. There's that option above at 85%. They'll work off open market value, but to get the really keen rates, you know, your 0.65%, they're going to go off the lower of the purchase price or the 180-day value. So I hope that makes sense. So factor in that the arrangement fee as well, and interest and other fees are deducted from the loan to value to give you your net loan. So that 75% loan to value might look more like 65% actual cash in hand once you've taken off your associated fees and your interest for the term. As I say, there are options for servicing the debt, but that will depend on affordability, credit rating, etc., and its experience, obviously, as well. Okay, next slide. So brace yourselves for the costs. So bridging is not a cheap form of finance, but it's a great tool, and you know, the majority of successful property investors are using it. The thing to bear in mind, I always say, is that if your deal doesn't absorb the costs of the bridging, then the deal isn't generally worth doing anyway. And the bridging lenders will actually vet your deal. They're not stupid, and they'll only actually invest. They don't actually lend to deals where there's a decent margin, etc., where you can imagine if you're buying in cash, you can get yourself into a little bit of trouble buying something for, it's happened a lot during COVID, buying properties for a lot more than what they're worth, and then, you know, you've got a property that's you know, with negative equity stuck there. So first, run through the cost. First of all, they're all generally higher than a mortgage as well. Various reasons for that I'll go through. So your broker fee, that will be charged on application generally. Reason for that is that you know, not all bridging loans go through. So you know, these kind of fees, the people are doing the majority of the work before completion. So broker fees, I charge £699 on application. with repeat business, you can bring that down to 599. So that's my fee on application once we've got all our ducks in row. We've got heads of terms from the lender. We've just gone through all the options of various different lenders, and yeah, that's the broker fee basically. That's when that's due. Once we've got yeah, so that's the broker fee. We've also got valuation fees, which are higher than the majority of fees. The reason for that is that you've got the day one valuation. You've also got the valuer will also want to look at your costings and how much you're spending on the refurb, and also make sure that the GDV stacks up. So you've got three-pronged sort of valuation. Legal fees are more expensive, just flying through these because so these are all upfront fees. Your broker fee, the valuation fee will be paid. Obviously the valuation has to be done to make sure the deal stacks up. Assuming the valuation comes back all hunky-dory, you'll then have to pay the lender's legal fees. So the legals can be a bit more complex, and we also expect solicitors to work at a fast pace, which you know, anything which requires speed comes at a premium. So those are your three upfront fees basically. You might then have you will always have an arrangement fee. Generally in bridging it's going to be 2% across the board. You might have an admin fee with certain lenders up to 600 quid, depending on the lender. Some are cheaper than others. You know, if you're looking at refurbishment bridging, that's going to be more expensive as well. Title insurance, some lenders charge you that. Obviously, if you've got a vacant property, more likely your insurance premiums are going to be higher because you're more likely to have, you know, people breaking in, vandalizing, squatters, that kind of thing. You may also have an asset manager. Basically, if you're doing a refurb, so they've got to go out and make sure everything that you're doing stacks up, and that all your costings are, you're not paying too much and that kind of thing. And then they'll release a tranche to basically pay for what the work you've done. And for really heavy refurbs, you might need a quantity surveyor, and they're more expensive again. Next slide. Okay, so quickly running over refurbishment bridges. So these are generally based on the GDV. So what the property is going to be worth post refurb. So the lenders will lend you a maximum of 75% of the GDV. So again, just keep that 75% figure in your head, but that's for experienced borrowers, and that, you know, that have got decent credit and a really experienced team. And yeah, so 75% loan to GDV and 75% day one. Again, these are real maximums. If you're looking at your first one, you're going to be probably 65-70% loan to GDV and 65-70% loan to GDV, loan to value day one. If you don't have experience, you must have a good contractor to put lenders at ease basically, and also be as professional as we can with drawing, with pulling everything together, you know, experience wise, and if we could pull all the forms together, you know, in a really sort of organized manner. Obviously, I mean, it's quite logical. I mean, lenders will like dealing with the organized applications, and it's key obviously to document your journey. If you're looking for future lending in the future, always document previous projects, before, during and after pictures, all that kind of thing. And you know, in a nice pack like you would present to investors, that kind of thing. Anything that can paint a really good picture of yourself is going to be really a bonus when it comes to achieving some lending. Okay. Is that everything? Okay, now it's up to you guys. I can take you through sort of what a bridging lender would want to, you know, see from you to churn out heads of terms. I was going to do a screen share. How are we doing for time, Claire?
We need to get on to the breakout rooms in a minute.
Yeah.
But yeah, we've got a couple of minutes.
Okay, well, just if there's any, just do it if there's any queries then, basically. If there's any questions. No?
Anyone got any questions for Alex about bridging? He will be in a breakout room in a minute if you want to talk to him directly about anything. No? So we've got loads of good comments. Great presentation, Alex. So there you go. Very good. Well done. I'm just gonna stop the recording.